A lot of our entrepreneurs have this particular feeling कि लोन ले लिया तो हम गए.
Foolish borrowing will lead to destruction. Sensible borrowing will make your business grow very, very fast.
So लोन जो आप ले रहे हैं वो actually सस्ता पैसा है.
Cheapest of all is bank debt. Every time a startup succeeds, you read about it in the newspaper. But for every one startup that succeeds, there are 10,000 others which failed. Nobody has written about them. If there was a graveyard of failed companies, the tombstone in front of many would have read, "Here lies a company that used short-term money for long-term purposes." I'm going to enjoy the struggle days while they are happening. I'm not going to look back and say they were good days.
Hello friends, welcome to this podcast Money Matters, and today I'm in conversation with a veteran, Dr. Anil Lamba, who's written almost 8 books in the field of finance, and he's been a real contributor to the finance space because he has actually taught most of us this particular knowledge of how to actually read financials, and in a way which are more simplistic than anyone must have ever taught you. So, sir, welcome to this particular podcast today, and it's such a pleasure having you here. Frankly, guys, for those of you who don't know, he's also my mentor. From a finance perspective, from a financial perspective, from a business perspective, whatever I've learned through his amazing book called Romancing the Balance Sheet. It's a privilege today sitting in front of you, sir, and it's actually so important to me today that मैं आपसे वो important questions पूछ सकूं जो मैं हमेशा से पूछना चाहता था, and sitting in front of you face to face is something which is my dream come true.
Thank you so much for inviting me today. Such a pleasure to be with you.
Absolutely, sir. So we today want to ask you that I'm sure a lot of our audience today wants to understand that what was your perspective when you initially started with your journey into finance. Of course, you're a chartered accountant, spent almost 20 years practicing. Post then you and also simultaneously you were also teaching, you were also training. So how was that journey, and why did you start that particular journey into teaching and training as well?
You know, Utkarsh, I think journey has been basically a series of flukes. No credit can go to my thinking as such. I think I was in 12th standard when my brother suggested, why don't you do chartered accountancy? That was the flavor of the season at that time. Everybody was appearing for, if you're not a graduate, you have to appear for what is known as an entrance exam. So everybody was applying for that. My brother suggested, you also do it. I didn't even know what a chartered accountant is and what you do. So because he suggested, I also filled the form without any preparation, appeared for the entrance exam. Next thing you know, you pass the entrance. So your path gets laid out for you. If somebody says, did you like finance ever? Nonsense. At that age, you don't even know what you want. I'm sure if I had gone into something else, probably would have done similar thing there also. Now, once you start chartered accountancy, and then when you pass out, now the question is what to do. I spent about little less than a year doing my industrial training in a company called Sandvik. That was my first and last exposure to corporate life.
Right.
In CA, if you finish your intermediate...
So you never got into a job?
Never. So I'm telling you how that happened. In CA, if you finish your intermediate and there is still at least 1 year of articleship remaining, at your choice, you can take up industrial training with a company. Correct. So I switched from my firm where I was doing CA to Sandvik. Wonderful company. I had a lovely time in that company. But that company made me decide I'll never work in my life.
Wow.
Which in a way was a bold decision because nobody in my life, nobody in my family was on their own. Everybody had a service background. And I kind of foolishly said, no, I'm not going to work. Fortunately, family was supportive. So I passed out and I set up practice.
All right.
It's easy to say you set up practice. There are hardly any client to start with. So, but I used to always hear people, they go through a struggle period They crib. And then later on, they say, those struggle days were such fun. So I used to tell myself, I'm going to enjoy the struggle days while they are happening. I'm not going to look back and say they were good days. So I've had a ball. Frankly,
Right.
looking back, I don't think I've worked a day in my life. I don't feel I've worked a day in my life. Every minute has been fun. The struggle, so-called struggle days were also fun. अब तो खैर बहुत ही मजा आता है.
So this you're talking about your journey into practicing as a chartered
I
accountant.
passed out. I set up practice as a CA. Simultaneously, by fluke, I started teaching because B schools tend to invite fresh chartered. At least those days they did fresh. Very few people used to pass out, so everyone knows who has cleared the CA exam. So B schools, so very leading B school headquartered in Pune, invited me to teach. First reaction is no, I didn't do CA to teach. But then on cooler thinking, you realize if you're supposed to be practicing as a CA and you studied everything, it's fresh in your mind. But if you don't get a client for a particular kind of work for a few months, your knowledge gets rusty.
Correct.
The only way you can keep in touch with your subject is if you teach.
Right.
So I applied that logic and I agreed to teach. But when I started, I found it to be so much fun. I was about 22, 23, and the students used to be 20, 21.
Wow.
So some of my best friends in my life till date are the ones I met over there. So
You were teaching them.
I was teaching them. In fact, one of my classmates, we passed out college together. He
Right.
did 1 year of something else and he came to this college to do MBA and I joined the college to teach. So I used to pull his leg all the time. I used to call him up, answer this question. And there he is, lip syncing and giving bad words to me, but he can't say it. So it was to be great fun. So because I enjoyed it so much, I took on a hell of a lot of teaching assignments. Taught in almost every management college those days.
Right.
But even though you're teaching a lot, it wouldn't make a dent in your day. Work-wise, I used to start working very early in the morning, 6:37, go on till late night. In between, if you have a 1.5 hour lecture, it's not even a blip on your day.
So you were saying you'd not plan this.
Nothing was planned. It's all a series of flukes.
It actually happened
Yeah,
so that
yeah,
you were practicing as a chartered accountant as well as teaching.
And I started writing columns in newspapers
Right.
on finance.
So that was my next question. In fact, where did you get this, writing skills from, and maybe your writing thought process as well?
No writing skills as such, but one of the things that is drilled into your head when you're studying for CA is that CAs or professionals for that matter are not allowed to advertise. So you can't give an ad saying I'm a CA and anyone. You're not permitted to advertise. Frankly speaking, if you were permitted, who had the money to advertise? But that's a different story. So the fear was, how will the world know one more CA is added to the group?
Correct.
And I was also doing my law along with my
Wow.
CA. After passing out my BCom, which was parallel with CA, I started law. And the principal of our law college used to run a column answering people's legal queries. And everyone knew him. So that was in my mind when I used to watch him. So I wanted to start a similar column so the world knows one more CA is there.
Absolutely.
So 3 things started parallelly. I started practicing, I started writing, and I started teaching. And I think in a way, all the 3 things I still do.
Wanted to understand from you कि आप जो ये बुक्स लिखते हैं, जो क्रिएशंस करते हैं, मुझे एक्चुअली समझना था वेयर इज दिस माइंडसेट आल्सो कमिंग फ्रॉम, बिकॉज आजकल के ज़माने में मैं देखता हूँ काफ़ी लोगों में फोकस भी नहीं है इतना, एंड एवरीवन इज एक्चुअली वेरी मनी ओरिएंटेड कि भाई मुझे आप ये काम मैं कर रहा हूँ, इसके लिए आप मुझे ये पैसे दे दो, दैट्स इट. इट्स ऑल वेरी ट्रांजैक्शनल. सो where is this coming from in you? When did it actually start? How is it that, have you ever thought about it कि ये मेरे दिमाग में कैसे आ गया?
I have no clue. I think I learn from every program that I conduct more than I teach. Learning is a constant process. Somewhere one imbibes these things and goes on.
But creation, for that sake, how did you understand the importance of creation? That maybe मुझे एक book लिखनी है, maybe एक course बनाना है.
I started in response to your first question, that life has been a series of flukes. Even though 7, 8 books are in the market right now, frankly, I don't think I've sat and written a book as such. My first book, Romancing the Balance Sheet, again happened by fluke.
You said you were you were actually sick.
Yeah, I was
that
sick.
time.
You know, I always wanted to write a book, because when you teach a bunch of entrepreneurs in a room and you realize, oh my God, seems to have had such an impact on them. I used to be surprised myself seeing the impact. But then gradually I realized, oh, this everybody needs to understand. And I am teaching 20, 30, 50 people in a room, whereas you should be teaching 50,000 or 500,000 people. So how to take the message to a bigger audience? And one answer was a book, but I was too lazy. I think I only do things that I thoroughly enjoy. If book felt like work, I won't do it. But one day I got this chicken pox. So I was grounded for 10 days. And I had nothing to do because I was physically feeling fine. But I was told you have chicken pox, so you can't step out of the house and don't mingle with people. So to kill time, I started typing stuff. I was writing without even knowing I'm writing a book.
Wow.
So at the end of it, so it just happened. It got created by itself.
Right. That's your first book,
That
which
was
is
my
Romancing
first,
the Balance Sheet.
Romancing the Balance Sheet.
Wow.
And then one thing led to another, and the next book, and the next book.
And then did it instantly become successful? How was that
Yeah,
journey?
it came on the bestseller list in the first week. And I have a letter from Crossword several years down the line saying this is the only book which has continuously been on the bestseller list since the day it was introduced. So I think that was a phenomenal response.
So I think what really happened is you wanted to pass your message.
Yes.
Is it? That was your
While
calling.
writing, I didn't know I'm passing a message. I was just putting on paper what I kept saying in the sessions. And eventually, yes, that's what happened.
So that was an opportunity to actually bring your ideas to a wider audience.
Yes. Yes.
Yeah. Moving on, sir. Just wanted to also understand what is been your motivation. What has been your thought process regarding earning money? This is something which I really love this question, because मैं देखता हूँ बहुत सारे लोग पैसे के पीछे जाते हैं. From your perspective, when you started, and did you also had this mindset of directly just start earning money, or you thought about earning money in a very different fashion?
Interesting question. I haven't thought about it, but when I look back, I realize I was never enamored too much by money. I've never chased money. Having said that, as trainers, we are probably among the more expensive trainers. The reason is not to make money out of it. I've always told my team that, we can charge whatever we want. But make sure after somebody goes through a program, he should come back and say it was worth every penny. Right. So the charging is not to make money per se. Charging is to communicate, this is what I think the value I bring to the table. And as a result, I've had such wonderful experiences. There are few people who have sometimes initially said, you guys are expensive. And then later on, they continued doing the program with us. And they've come back and apologized. Anil, I'm so sorry. I didn't even know this is what you bring to the table. So I feel this applies to anybody. Charge whatever you wish. I don't know where this audacity came from. When I did my first program of my life, public program, we said, and I was 20s. We said, just find out what do others charge for this program. And we priced ourselves for twice that. Wow. I don't know what made me do that. But looking back, I think as a result, we are not in competition with anybody else, because price-wise, we don't fit. We are nowhere. We are head and shoulders above our nearest competitor. I mean, not 2x, 3x, maybe we are 10x. Right. So the price suddenly eliminates you from the crowd. So I always felt that, when there are too many people, it becomes a red ocean. We are swimming in a blue ocean. Right. But the conscious effort is, if I charge you X, I should bring to the table 2X for you at the end of it.
So that was the thought process.
That philosophy now that you ask me, I'm trying to think. It's not a conscious thing. But that philosophy, I think, has held us in good stead.
So would you say that not really concentrating on money, but concentrating on your craft and concentrating
Yes.
on
Yes.
what you
Paradoxically, if you don't run after money, money comes more easily.
right,
It's like the story you hear about this little puppy running around in circles. So somebody asked him, "Why are you running in circles?" He says, "I've been told happiness is in my tail. So I'm trying to catch I'm chasing happiness." So some older dog passing by said, "Son, even I've heard happiness is your tail. But I realize if you run after it, you can't catch it. But you start going your way, it follows you."
right,
So same
right.
thing I think applies to money.
No, absolutely. So, of course, from a money mindset, what you are saying today is that concentrate on your craft.
Concentrate on your craft, concentrate on giving value, concentrate on making sure anyone who's paid you doesn't feel let down, feels it was worth every penny. I think then money comes easily.
Right, right. Contribute, basically. Contribute to
Yeah.
others' success.
Yes, yes,
That is the
yes,
perspective, in
yes,
one sense.
yes.
Since you've actually written down your thoughts in such deep manner in your book as well, Romancing the Balance Sheet. Today, I just thought I'll ask you some of that wisdom, some of that those perspectives which are of course mentioned in your book, but coming from you directly on this particular podcast would really matter to people, may go deep down inside their heads as well. So sir, wanted to first of all ask you, from an entrepreneurship perspective, what do you think are some of the major mistakes entrepreneurs make in their lifetime? And we see a lot of entrepreneurs starting, watching today. And what would you suggest to them to be cautious about when they are into their business journeys?
Too many things. The question is short, but the answer can be very, very long. Normally, these questions would get answered over a 3 to 5 day, 9 to 5 o'clock program. But if I have to answer in a nutshell, I think one mistake we make is we forget that business is not about generating top lines, it's about bottom lines.
Right.
Entrepreneurs put too much focus on sales and forget that the objective of business was actually to make profit, not to generate sales. Second thing they don't understand is there is a huge difference between the profit that a business makes and the cash flow that it generates.
Right.
They're two different things. Just because you make profit doesn't mean your cash flow will necessarily be positive, and vice versa. So, equal attention has to be paid to cash flow. Another thing that most entrepreneurs don't understand or misunderstand is the concept of cost of capital. They consider debt to have a cost, but they don't understand that equity not only has a cost, it is far more expensive than debt.
So, sir, I understand what you're saying is don't just concentrate on the top line, concentrate on the bottom line. In fact, some of the your thoughts, which I read in the book as well, you clearly saying concentrate on that top line, which brings you the bottom line.
Correct.
And but getting a little deep into this, how does one actually balance these aspects? Because sometimes what happens is sometimes people go test stuff and want to get into different products, different geographies. Not every time it's like a simple thing to be done.
I'm not saying
How do you manage complex?
I'm not saying your profit has to start from day one, but you got to remember the sales is being generated in order to make profit.
Right.
Your objective is not just to make your top line stronger and bottom line becoming weaker. You can't last, you can't sustain. Sooner or later, it has to bring profit. So your focus has to be profit. Your sales decisions have to be profit oriented. All your diversifications, new markets, why are you doing? In order to eventually increase your profit. For a while, profit may dip because there are gestation periods involved. But never to forget the objective is to make a profit.
So, can you give us some examples, like what kind of goof ups have you seen from entrepreneurs in terms of increasing their top line, but bottom line is not getting impacted as much.
I think one of the reasons why this happens is some of the startups which are heavily funded.
Okay.
They went in for generating footfalls, eyeballs, whatever you may call it.
Right.
And many aspiring startups looked at them as role models and didn't understand that they got godfathers standing behind them like SoftBanks or whatever with huge amounts of money saying you continue generating losses, we'll fund it. Everybody can't do that. Now, every time a startup succeeds, you read about it in the newspaper. But for every one startup that succeeds, there are 10,000 others which failed. Nobody has written about them.
Do you think this happens in regular companies also?
Absolutely.
In terms of something into a mid-size?
It happens everywhere. If your profit, you lose focus about profit.
Profits.
Yeah.
Right. So maybe the margins reducing, somehow getting into products where your margins are reducing drastically.
Not as simple as that. Sometimes margin reducing can be a matter of strategy. You're focusing more on volumes rather than higher. That's all fine. So long as you keep reminding yourself, do you have a plan to generate a positive bottom line? I've always said, even if you're in charity, in charitable organizations, you don't use the word profit. You use the word surplus and deficit. If a charitable organization generates deficit, it will fold up. It won't be able to do charity for long unless you have a surplus.
Absolutely.
So whether you're a commercial organization or a charitable, the bottom line has to be plus.
The other thing which you mentioned was about profits and cash. They don't necessarily mean the same thing, is it? And
there's a funny correlation between profit and cash.
Right.
Which I think is an inverse correlation. The statement may not make sense unless I give a couple of hours of explanation. But funny part is sometimes the more the profit an organization makes, the lesser the bank balance it has.
Wow.
And if you have a less bank balance, it need not be a cause for concern. It could be a cause of celebration. The cause of concern is when that profit is sitting in your bank. I mean, how can a successful organization, a growing organization have huge amounts of bank balance? That money should not be in the bank, it should be deployed outside.
Absolutely.
So every successful business probably should be planning where the money will go before it has come in. So shortage of money, according to me, very often is a characteristic of success.
I remember that line from your book.
That doesn't mean every company short of money is successful, because those idiots who mess up the affairs will also be short of money. So you got to make sure your shortage of money is due to the right reasons.
Correct. I remember that line from your book. Less is bad, more is worse.
Less is bad, more is worse is a different mantra I have.
Yeah.
I feel that mantra, which means everything should be at an optimum level.
Right.
So anything, I mean, should you have less people on your payroll or more? Guys, if you have less people, some functions won't get performed. If you have more people on the payroll, they are what is known as non-performing assets. And non-performing asset is the biggest, let's say, something that you can't really afford. If your factory has less installed capacity than necessary, some orders will not get executed on time. But if you have more than necessary installed capacity, it is NPA. Right. If you hold less inventory in your warehouse than necessary, again, some orders won't get executed on time. If you hold more inventory, it is NPA. Right. And what does an NPA mean?
It's a non-performing
Anyone
asset.
who understands the balance sheet will know the liability side tells you where the money has come from, and asset side tells you where it got used.
Yes.
Now, every liability has a cost.
Correct.
Including owner's money, which is the most expensive, as I said earlier.
Normally, we think that owner's money is free.
Correct. Now, if every liability has a cost, then ideally every asset must earn.
Absolutely.
But non-performing assets don't.
Correct.
So if your sources cost you, let's say on an average 20%, then this business will survive if the assets earn 20%.
Right.
But now imagine somebody has less is bad, more is worse. You have more, which is NPA. If half your assets don't perform, your sources cost you 20%, assets must earn 20%, but half your assets don't perform.
Right.
So you got to earn from the remaining 50%. So they'll have to earn 40%, twice as much.
Absolutely.
So NPAs are a very, very expensive luxury to bear.
Right.
So if you have less, you will suffer. If you have more, you will suffer more.
Right, right. I would also like to ask you about that earlier statement which you made, profits are different from cash.
Misconception people have is profit means money.
Correct,
Profit is not money. Profit formula is totally different.
correct,
You may sell worth 100 crores
correct.
and you may have consumed 80 crores. You
Right,
made a profit of 20 crores.
correct,
But will it be in the form of money? What if your sales happens on credit?
correct.
Customers say, I'll pay you after 3 months, and all your purchases happened on cash.
Right,
So you spent 80 crores on cash. Your money has gone out. You sold 100 crores but on credit. Money hasn't come in.
correct.
This company has a 20 crore profit but a minus cash balance of 80 crores.
Right.
I'm giving you
right.
an extreme example.
You can have a
So
lot
there
of
are-
inventory
there are
also,
various-
which is not used in, this year you have purchased. but
I
not
give one
actually
example. There are
consumed.
100 more things that contribute. So end result is profit and money are never the same. But cash is important for running of your business.
Right.
So on the one hand, you should be making profit, but on the other hand, you got to manage your cash flow. Otherwise, if you can't pay salaries on time, there'll be unrest. They'll go on strike. If you can't pay your vendors on time, they may stop supplying. So equal attention should be paid to
Correct.
profit management and cash flow management.
Correct. Not every time अगर आपके पास cash पड़ा हुआ है books में, that will not mean that you are profitable. So you got to be very cautious
Cash could
about
be
it.
there because you've taken a loan from a bank.
So,
it
sir,
could be again various reasons
absolutely.
why you have cash.
तो सर फ्रॉम अ वेरी रियलिस्टिक स्टैंड पॉइंट अगर आज मैं कोई बिजनेस कर रहा हूँ तो मुझे इस बात का हमेशा ध्यान रखना पड़ेगा एंड आई थिंक कंटिन्यूस बेसिस
किसको
पे मुझे
किसको
अकाउंटिंग
ध्यान रखना पड़ेगा, किसके एक्शन से प्रॉफिट आता है, किसके एक्शन से कैश फ्लो इफेक्ट होता है. इट इज द रिजल्ट ऑफ द एक्शंस ऑफ एवरीबॉडी इन द ऑर्गेनाइजेशन.
राइट राइट
हर एक का एवरी इंडिविजुअल्स एक्शन हैज द पावर to impact the bottom line and has an impact on the cash flow.
राइट
Finance management is not the responsibility of one person, it is the responsibility of the entire organization. So, unless everybody, as far as possible, take financially intelligent actions, the organization cannot be financially intelligent. And what does a financially intelligent action mean? An action that is taken after taking into account the impact of that action on the company's bottom line and the impact of the action on the company's cash flow.
Right.
Any action taken after evaluating these things is a financially intelligent action. When a large percentage of people within the organization take financially intelligent actions, that organization becomes financially intelligent.
2 मिनट के लिए सर हम छोड़ देते हैं कि कोई हम ऑर्गेनाइजेशन की बात कर रहे हैं. लेट्स से मैं एक एंटरप्रेन्योर हूँ, अभी कोई बिजनेस शुरू किया है तो
तो आपका ऑर्गेनाइजेशन हो गया ना.
absolutely
You have it. It could be a small organization, but it's an organization.
Yes. So how do I think? Because let's say today I have this particular perspective. यार मेरे अकाउंट में इतने पैसे पड़े हैं, and should I be continuously also monitoring my P&L? Should I be making one? Should I be continuously be engaged in that particular activity as well? How would you say that we manage this continuous process of monitoring?
I think it's a finance management should become part of your DNA. If all your actions are financially intelligent, the end result will have to be positive.
Right. So that mindset, I think, somewhere लेके आना पड़ेगा.
And financial literacy.
Literacy.
So I seem to be on a mission to spread financial literacy across the whole country in every level, because if lack of financial literacy is very, very expensive for everybody.
Correct. The third part which you said, which entrepreneurs mainly goof up, maybe they invest in businesses where their return on their investment is actually lower or equivalent to the cost of capital.
Now, why does that happen? Because they are blissfully ignorant about their cost of capital. And why are they ignorant? Because they do not attribute a cost to the most expensive capital, which is owner's capital.
Absolutely.
So
for some of those people who are watching today, sir, this might be an extremely new concept, in fact, where सब सोचते हैं कि ओनर का पैसा है, मेरा खुद का पैसा है तो वो फ्री है, उसके लिए किसी को मुझे पैसे थोड़ी ना देने. बट नाउ व्हाट यू आर सेइंग इज दैट इज एक्चुअली द मोस्ट एक्सपेंसिव थिंग. यस. एंड सो लोन जो आप ले रहे हैं वो एक्चुअली सस्ता पैसा है.
cheapest
cheapest.
Cheapest of all is bank debt.
Okay. So could you break it up? What is it that you think might be a cost of capital for
that is for
different
each
businesses?
entrepreneur to decide
Right.
what would you like to attribute. I can give you my suggestion on what should be the rock bottom.
Right.
First of all, tell me, why did a banker lend money to an organization? Anyone who borrows, entrepreneur, why did the banker lend money? Intention is to earn.
Earn.
Why did the owner invest money in the business? Intention is to earn.
Correct.
Now tell me, if a banker gives you money at 12%, should the owner also be happy with the 12% return? Answer is no. A banker doesn't take risks. Banker gives you money, then takes security, takes guarantees, takes everything. Owner puts in money with zero guarantees. All the risks are the owners.
Right.
So my point is, if a banker is expecting 12% with zero risk, owner who risks everything, his expectation should be 24%.
Absolutely.
Now, when the owner could have put this money anywhere else.
Correct.
He could have put it in a bank and earned money. He could have put it in stock market and earned money.
Mutual funds.
Mutual funds, he could have made money. In a bank, he could have earned 5%. In bonds, he could have earned 10%. In mutual funds, he could have made 15-20%. In stock market, little more than that. Now, should he put his money there or should he put it in his business?
Absolutely.
Guys, if you can make 20-25% outside, when you invest money in the business, you not only invest money, but you start working morning 8 o'clock to evening 9 o'clock. Should you not deserve something more than that? So my thinking is, the rock bottom expectation of an entrepreneur should be, at whatever rate you can get loan from outside, owner's returns should be minimum 3 times of that.
3 times.
3 times.
Wow. So you are saying that if you're getting a loan at maybe 9%,
then minimum 27%.
wow.
Ideally more.
Ideally
Rock
more.
bottom should be, I think, about 3 times.
But I think it's while we say that, it's not very simple also to fetch that kind of returns, and it does take a lot of work.
Hold it. Now, when I say you should earn 20, 30, 40%, people wrongly interpret it to mean profit margin.
Right.
I make this kind of statement in front of the biggest of entrepreneurs.
Of course.
I am addressing groups of, let's say, in a FICCI meeting or in a YPO meeting or an EO meeting.
This is a clarification, I think. Absolutely.
So good, you brought it up. So, and you make a statement, guys, don't even invest in a business unless you can earn minimum 30, 40, 50%, I say. A few entrepreneurs immediately get up. You say, Anil, which kind of business gives you that return? Then I need to explain, what do I mean by 40, 50%? Guys, I'm not talking about profit margin. I'm talking about a concept called ROI.
Absolutely.
Imagine I sell this product, I buy it for 100 and I sell it for 101. What margin did I earn? 1%.
1%.
Now, should I be doing this business? My target is 40, 50%. I'm getting 1%. Should I do this business? Imagine I can buy this for 100 rupees in the morning and I mark it up to 101, next day give it to you. You give me 101, I buy another piece. I mark it up to 101. When I sell it, I buy another one. I rotate this money 365 days in a year.
Correct.
Guys, on 100 rupee, I earned a 1 rupee margin every day for 365 days. My ROI is 365%.
Absolutely.
I am saying 30-40%.
Correct. So what you're saying is
ROI versus profit margin. I'm talking about ROI.
Absolutely. So what you're saying is सिर्फ profit margins देख के decide मत करो, but return on investment देखो.
People, you said, should you chase profits or not in the beginning? I said, don't chase money as such. People, when they want to increase profit, try to increase selling price because they want to increase margin. I think that is not profit, that is profiteering. Don't do that. Concentrate on ROI. Right. In fact, to increase ROI, you might need to reduce prices rather than increase prices.
Correct.
But if you have more rotations, if you have more cycles in a year, your profit will go up.
So it's possible that a thinner margin can give you a higher ROI.
Absolutely.
Or vice versa.
Absolutely.
Both the aspects are possible.
Absolutely.
But आप बेसिकली ये बोल रहे हैं कि भाई एंड में तुम्हें अपनी
cost of capital equity recover करनी है, otherwise the business is not justified.
Absolutely well said, sir. And from that perspective, we'll also like to know from you that कि अब जो ये पैसा आ गया है आपके पास return, let's look at, we actually discussed the liability side, right? पैसा कहाँ से आ रहा है, let's also try and understand पैसा कहाँ जा रहा है, which is our asset side. And there are two components there, your long term stuff like fixed assets, investments, and also about working capital. Yeah. So we'd like to know your understanding on what you just said about your performing assets and non-performing assets, because I think that is what I was really intrigued about. Ki, what are those performing assets and non-performing assets? I think a lot of our audience would also today like to know.
Yeah, performing asset. Let's say you have a car and the car
Correct.
runs beautifully.
Right.
Is it a performing asset or a non-performing asset?
So
Your car is a non-performing asset. The taxi owner's car is a performing asset. So by performing or non-performing, I don't mean it doesn't perform the function it is supposed to perform. Some assets earn for you, other assets don't earn for you.
It really depends on
Now,
who you are.
non-performing doesn't mean non-essential.
Right.
So your non-performing can be further broken up into essential non-performing and non-essential non-performing. My recommendation is, guys, at the earliest opportunity, make a list of all the assets that you own. Classify them between performing and non-performing.
Right.
My experience is, if you're lucky, your proportion will be about 50-50, if you're lucky. If not, and non-performing can be even higher than that. Now, if it is essential non-performing, it's okay. But if you happen to have non-essential non-performing assets, I suggest at the earliest opportunity, get rid of it, release the money blocked in that, bring that money back into circulation. Very often in certain companies, the single act can take your profitability moving up.
Can you give us some examples? Non-essential, non-performing kaun se
Imagine right now we are sitting in, this is a hotel, and we are sitting in a conference hall of a hotel. Now the hotel spend money to build this hall.
Correct.
Is it a performing asset or a non-performing asset? Chances that we are paying rent for this facility, so it's a performing asset. There are rooms the hotel built upstairs. Performing or non-performing? Performing. But they have a lobby, they have a lounge, they have a parking area. Nobody pays them rent for that. But it is essential non-performing.
Correct.
But now imagine this was a 1 million square foot facility. If they had built 800,000 square feet where they were charging rent and 200,000 square feet where facilities and amenities were provided, it's understandable. But if you reverse the combination, then this hotel has a sizable percentage of non-essential, non-performing assets.
Right. So that can be avoided.
I'm saying if you improve this, there's so many such suggestions one can give. Guys, each of these suggestions will take your profit moving upwards.
So I think in each of our businesses, we can look at that particular portion.
Everybody, irrespective of the business you are in. Absolutely.
What might be just completely done away with. Something which is
people don't even realize.
Non-essential.
Yep.
So another very, very important aspect which, I love what you teach is your the use of leverage and the use of fixed cost.
Yep.
I think a lot of our entrepreneurs have this particular feeling कि बॉस लोन ले लिया तो हम गए, हमारे साथ प्रॉब्लम शुरू हो गई. Some of my friends who are into real estate, in fact, have told me many times that, boss, I have decided never to take loan. So what would you like to say to these people and how to manage leverage as well?
Foolish borrowing will lead to destruction.
Right.
Sensible borrowing will make your business grow very, very fast. Now, what is sensible borrowing? Folks, if for heaven's sake, don't borrow money because somebody wants your daughter to get married. Don't borrow money because you'd like to go on a holiday. This is ridiculous. If you can't afford a holiday, don't go on a holiday. Go somewhere cheaper. But you have a business opportunity. You need to invest a certain amount of money. Let's say 100 crores. Now the choice is either I don't have the money, either I let go that opportunity, or I can borrow 100 crore from a bank. And if you borrow 100 crore, the banker says pay me 10% interest, and this opportunity can generate a 30% return. Now, should you borrow or should you not borrow? It's a no-brainer.
Absolutely.
If you don't borrow, you'll have to let go that opportunity. So, two things I feel are necessary. When you borrow, it comes with an obligation to service that loan.
Correct.
And it comes with an obligation to repay the loan.
Right.
If the use to which you're going to put this money and the return that you will generate, if that return is greater than the cost of loan, not enough. And if you borrow money and invest, today there'll be a cash outflow. But where you invest will sooner or later generate an inflow.
Right.
And here you committed to a bank, I'll return the loan. So which will involve another outflow. If the inflow from the investment can happen before the outflow on account of repayment has to happen. If these two rules are not violated, which two rules? Earnings should be greater than the cost of borrowings.
Absolutely.
Inflow from your investment should happen before the outflow on account of repayment of loan has to happen. If these two rules you don't violate, the more you borrow, the more you will prosper.
Absolutely.
So anyone who borrows and gets into trouble doesn't get into trouble because the fellow borrowed. He gets into trouble because he borrowed where one of these two rules gets violated.
Correct. So a lot of people, I have seen what the classic mistakes a lot of people which they do is that borrow karte hain short term ke liye.
That is the second rule I told you. That's the second rule I told you.
Absolutely.
Don't use short-term money for long-term purposes. Because what will happen? Long-term purposes means it will come back after a long term. And short-term borrowing means it has to be returned in the short run. So second rule violated.
Right.
Either the first or the second rule gets violated, you'll get into trouble. These are my rules, not standard rules. But you bring me any sick company's balance sheet and I'll show you which of the two rules was violated.
Absolutely.
Had they not violated, they would not be sick.
राइट. तो ये जो मैंने देखा है, जो नॉर्मल मिस्टेक्स जो लोग करते हैं वो वर्किंग कैपिटल पर्सपेक्टिव से पैसा लेंगे और घर खरीदेंगे.
वर्किंग कैपिटल लोन, घर खरीदना तो सबसे बड़ा क्राइम हो गया. आई एम अज्यूमिंग यू आर इन्वेस्टिंग इन योर बिजनेस. इफ यू डाइवर्ट फ्रॉम अ बिजनेस एंड टेक इट आउट, दैट इज द वर्स्ट थिंग यू कैन डू.
So of course you're right about listed company. Some of the even small companies with a turnover 10 crores, 20 crores. A classic mistake.
I think the graveyard of failed companies is full of cases. I've always said if there was a graveyard of failed companies, the tombstone in front of many would have read, "Here lies a company that used short-term money for long-term purposes."
So that's a classic mistake.
Absolutely. I can give you names and list. I don't right now, not the time. I can give you case studies of tens of such companies.
Do you remember any listed companies also?
All listed की बात कर रहा हूँ अभी मैं.
Wow. बट सर ऐसा होता कैसे है? बिकॉज इतनी ऑफ कोर्स इतनी
that is what we train over
3-3-5-5
days. No, regulations can be, that's a different story.
And somehow
there are no regulations for many of these things. It has to be your own financial intelligence and financial literacy. So again, lack of financial literacy leads to this.
So would you say that a lot of these listed companies also,
they don't do it by design. They didn't do it to cheat anybody. They did it because they didn't understand the ramifications of doing so.
And what happens if suppose there's a balance sheet date, and of course you have to show the balance sheet as on that particular date, and you suddenly find that there
How many people know how to read balance sheets? Yeah. I spend all my time trying to teach people how to make sense. It's all there. It's not rocket science either. But first of all, just as people think equity is free, they start thinking finance management, not my job.
Right.
Production in my company is handled by production guys. Sales is handled by sales guys. So finance is handled by the accountants. Nonsense. Finance is everybody's responsibility. In fact, accountant is the only person who's not there when finance management is happening.
Right.
The fellow comes into the picture after everything is over and does a post-mortem and tells you whether you made a profit or a loss.
Correct.
So unless people understand the importance of financial literacy and financial intelligence, unless you take steps to make sure that your entire organization is financially literate, an organization cannot do all the things which are correct from a finance management perspective.
Right.
And therefore, it's a problem waiting to happen.
Right, right. So you also speak about use of leverage and use of fixed capital, fixed cost. How you can actually use this to benefit. If you can tell some
See,
of our
because this is
entrepreneurs
a
today.
short conversation,
Sure.
certain things which have very, very large implications.
Right.
If I explain in 2 or 3 lines, everybody may not be able to grasp what I am saying.
Right. But can you use leverage and fixed cost to your benefit?
Absolutely.
Because why I'm asking you, I'll explain to you a little bit. Because there is a practical problem where people have started believing that boss leverage ले लिया तो I am down the drain. And the second thing which they believe that if I today have a higher fixed cost.
See, you again, either
Then-
you're speaking from a personal finance perspective or a business finance perspective. Personal finance, I agree. Avoid leverage as far as possible unless you're buying stuff.
I think more from a
houses or
business
something.
perspective.
Business perspective, I just explained the 2 rules.
Correct. That rule is taken.
But
Absolutely.
leverage is a far bigger word than what you're using. The world uses leverage in the context of highly leveraged company means a company that borrows more. Guys, that's a very narrow interpretation of the word leverage. Leverage is a term derived from an engineering concept called lever. What is the function of a lever? Function of a lever is if you wish to lift a weight and you take the help of a lever, which is a mechanical device, the effort that you exert on one end is less and the weight that you lift on the other end is more. In finance, so leverage is about magnification.
Right.
Magnification of your efforts.
Correct.
In finance, we are saying effort that you put on generating turnover, etc., is X, but the impact on bottom line should be 2x, 3x, 4x. This is a leverage effect.
Correct.
And to enjoy the leverage effect, you need to have fixed costs in your costing structure.
Right.
Now, what does it mean? Suppose you work twice as hard and you doubled your turnover. Now, when will profit double? Your turnover doubled, your expenses doubled, and your profit doubled.
Correct.
But imagine all your expenses are not variable. There is a fixed cost. So when your turnover will double, the variable costs will double, the fixed cost will not increase.
Correct.
So turnover became 2x, costs became 1.5x.
Right.
So the profit will go up faster.
Right.
So leverage gives you an advantage here. Now there are 2 types of leverages because there are 2 types of fixed costs. There are fixed costs necessary to run operations. Salary is a fixed cost. There are various kinds of operating fixed costs. And there is a fixed cost based on the way you fund your business. If you fund your business using equity, it has a variable cost. Company earns more, owner earns more. Company earns less, owner earns. It's a variable cost. But when you take a loan, the interest is the commitment.
Correct.
Just because you earn more, banker doesn't say pay me more.
And as you said, it is much cheaper than
And it is
the
cheaper.
cost of equity.
Now that's a different concept. That's a second benefit. So guys, when you have more loan, you have more interest. Interest happens to be a fixed cost. Fixed cost leads to leverages, but leverage could have happened due to operating. So there are 2 types of leverages, operating leverages and financial leverages.
Correct.
And therefore you need to balance the 2.
Right.
A company which is highly leveraged can give you huge returns with a slight increase in turnover, but it works both ways. With a slight decrease in turnover, there will be an equally strong fall in profits. And therefore, highly leveraged companies become highly risky companies. So again, coming back to your question, should you borrow or no? Now here the answer is different. You got to understand your leverages. Those who have a higher operating leverage should try and not borrow much. Because you're already enjoying the benefit of leverage. If you also take loan, your even financial leverage will go up and you'll become a very risky organization.
Right.
So those with high operating leverages should try and keep financial leverages low, but those who have low operating leverages can afford to borrow more. This is one more perspective.
Absolutely.
I'm sorry I've not done justice. This is too big a concept.
Yes.
I tried to cram it
So,
into 4 minutes.
from what I'm understanding now, is that let's put it in a very very layman term कि अगर मेरी predictability of revenues are better? Let's say today I'm an
Then
entrepreneur.
you can afford to have fixed costs. Going one step further, I always say you should try and swap
Okay.
variable and fixed costs.
Okay.
During boom times, wherever possible, swap a variable for a fixed cost. But when recession set in, start doing the reverse. In other words, if the markets are booming and you're planning to introduce a new product and you are trying to debate this new product, should we make it in-house or should we outsource? Guys, go for in-house, because in-house will have fixed costs. Outsourcing is purely variable cost. But if you're doing it during recessionary conditions, go for outsourcing. If markets are booming and you feel a lot of business can be brought in, and what you need is a team of live wire salespeople, and you're planning a recruitment campaign, and you're trying to figure out how do I reward these recruits in terms of salary versus incentive, you must understand salary is a fixed cost, incentive is a variable cost. Maybe as a strategy, if markets are booming, you should come out with a recruitment advertisement offering a salary which is maybe 75 to 100% higher than the highest paying company in the industry, but no incentive.
Yeah.
Now, what will happen? If you pay such a ridiculously high salary, the best talent will come to you from industry. This best talent takes your sales graph moving upwards, but it has come accompanied by a fixed cost. It is a genuinely win-win situation. You are planning an expansion. You are trying to figure out where will the next tranche of money come from. You have a choice. You can approach a financial institution and take a loan, or you can raise money by way of equity. If you raise money by way of equity, the cost is called dividend. If you raise money by way of debt, the cost is called interest. Interest is a fixed cost. Dividend is a variable cost.
Wow.
In boom times, you want to expand, go for debt. In recessionary conditions, you want an expansion, go for equity.
Wow, sir, amazing. I think those were
I
some
think I gave you an
golden
overdose.
nuggets. I think people would like to actually slow down and watch this again and again. So some really wise words coming from you. Thank you so much for that. We missed out on this particular part where you actually said that concentrate on your return on investment. And I understand that you are not that much into investing. You don't even like to talk about.
I do
you
hell of a lot
personal
of investing, but I don't do it professionally, in the sense I don't charge and teach people. I don't give tips on stuff. I'm not a broker.
Of course.
Yeah.
But from understanding a particular company and their performance, and even where investors should actually look at a particular company. If suppose let's say मुझे बहुत ज़्यादा stories पता नहीं है कि sector में कौन से sectors grow करने वाले हैं and stuff like that. But I want to identify good companies. So from that perspective, I found your return on investment concept extremely useful, where an investor actually has one particular ratio which is saying a lot. What I feel personally, ये दो चीजें बता रहा है. One is pedigree of the company, and one is even the kind of growth which it must be having. So it's a beautiful ratio from that perspective as well. And as you said कि कोई company अगर अपने लिए 18, 20 या 27% या 30% का रिटर्न ऑन इन्वेस्टमेंट नहीं कमा पा रही है, तो हो सकता है वो इन्वेस्टर को भी क्या देगी.
Correct. Investor, in fact, is the owner himself. So you're talking about
Absolutely.
return for owner.
Is the owner. So if a lot of companies I see कि 10% return on capital employed कमा रहे हैं, and investors get into it with no particular growth story as such which is going to happen. And a lot of times I ask this question कि भाई वो अपने लिए भला नहीं कर पा रहे हैं, तो वो आपके लिए क्या करेंगे? So do you think from an investor perspective also?
Absolutely.
This concept is really important.
Every Sunday I send out this little Sunday musings on finance.
Right.
Which over the last couple of years have become very popular, and they go to lakhs of people, I believe. And Harper is bringing out a book on that. In one of these musings I was writing, that you hear very often a business is run for all the stakeholders. And I was writing, it's nonsense. Business is run for all the stakeholders. Business is run for one stakeholder, and that is the owner. जो आप बात कर रहे हो ना, owner को return नहीं मिलेगा. All the other stakeholders, the vendors, the employees, the lenders, are facilitators in the process of the owner making money.
Correct.
Because if only the facilitators make money and the owner does not, it's a matter of time before the owner will say, I don't think we should continue this business, band karo yaar isko, and then nobody will make money. So owners' returns are so important. The vendor should make sure, not try to fleece the company. Because then the vendor is making money, company is not, company sooner or later band kar degi. Vendor should work in such a way, employees should work in such a way, banker should work in such a way that the owner makes money.
Correct.
Till such time that the owner continues to make money, these guys will continue making money. This is the principle they need to understand.
And end में हम काफी कंपनीज के साथ इस पर्टिकुलर केस में ये देखते हैं जिनका प्रॉब्ली आरओसी बहुत सालों से चल रहा है 10% पे 12% पे कि वो एक्चुअली ओनर के लिए काम नहीं कर रहे हैं, वो किसके लिए कर रहे हैं. I don't
start questioning why are we in existence. Absolutely.
Yeah. So amazing, sir. I think it's been a real pleasure speaking to you today. I think so many of us have been benefited by the wisdom nuggets which you have showered on us. It's guys, it's amazing that I remember when I was in my 20s, I read this book, Romancing the Balance Sheet, and it completely changed my life. And it whatever finance knowledge which I've received till now has been all thanks to this book. And I somehow, sir, feel that pura education mera, right from schooling to college to even sometimes I feel that while I was pursuing my CS and CA as well, even in MBA for that sake, I could not grasp these amazing concepts which you actually told in this book. So it's thank you so much. It's a contribution to the society.
I'm so happy you liked it.
Yes, absolutely, sir. So thank you so much, guys, and it's a real pleasure bringing you such veterans of the industry who are giving us such golden nuggets, and hope you guys have enjoyed this particular session. Thank you so much. Yeah.